presentation here on control your cash flow. It's great to see everyone virtually. I'd love to encourage everybody to put their cameras on if they can afford to do so. If your internet connection is happy for that, it's good to see some faces in the audience, and also let you know that there's a interactive activity pack that we'll be using. We've put a link to that in the chat window, so open up the chat window and have a look at getting a link to that activity pack. Okay, so see if I can get my technology working perfectly and share the start of this presentation. All right, so welcome everybody. Today is control your cash flow. It's a very relevant topic at the moment in relation to businesses struggling with the effects of lockdowns and interruptions to our activities over the Christmas period and with Omicron and staff shortages. So we thought this would be a very timely presentation to put in with the Brisbane Business Hub. So my name is Craig Mitchell. I'm a partner at BDO. I am a partner in the Business Services Division, and we work with small business and medium businesses in all sorts of taxation and businesses advisory. I also work in our financial education team and provide a lot of financial education masterclasses like this one, workshops, and also our flagship business growth program. So before we get started, today is a very interactive presentation. Normally we like to present a lot of our activities in person at the Brisbane Business Hub. I've had the opportunity over the last 18 months or 12 months to get in and present a number of topics at the Brisbane Business Hub. It's always great to see people face to face, and we always encourage people to join in, ask questions, and be part of the conversation. So what we need for today's session is just an open mind and a willingness to learn. A copy of the activity pack. I've posted a link in the meeting chat, so grab a copy of that, download that. You'll be able to use that, follow that through as we go through today's masterclass. And also there's a page in there we'll be doing an activity together. And today, look, the rules of play, be kind and courteous to everybody. We encourage people to get involved in the conversation, ask questions to make this more relevant to you, your business, and everything that we're seeing going on at the moment. Keep your video on if you can afford to, and keep yourself muted, but feel free to jump out and ask a question. I'll be asking for questions from people or comments from people as we go through. And also Chatham House rules, like we're all business owners here or people in business. We want to talk about some things about business, but please consider the confidentiality of any of the information and just keep it within these walls. And of course, there are no silly questions. Sometimes those questions are the questions that everybody else in the room's probably wanting to ask as well. So don't be afraid to put your hand up and ask some of those questions. So if you're new to us, make sure you get a copy of that activity pack that we've posted a link to in the meeting chat, the chat room. And if you've got any questions, feel free to put your hand up, type something in the meeting chat, and we'll call that to attention. We can address some of these questions as we go through. So quick overview of what we're going to look at today. Today's all about control your cash flow. So we're going to start looking at some common cash flow mistakes and how to avoid them. Now we're going to do an activity to understand how cash flows through a business, and then identify some strategies to decrease or increase cash flowing in and out of our business. We're going to dive into some financial obligations that we often overlook, our ATO payments and other obligations that we might have, where we might be holding cash in our bank account without realizing that cash is not ours. And then we're going to finish off talking about structuring a cash flow forecast that we should be applying in our business and what we recommend to do going forward. So make sure you got a copy of that activity pack. It should look like the page on the right hand side there, that control your cash flow pack, and we'll kick off without further ado. So what is cash flow? As business owners and people in business, cash flow is fundamental. It's the incomings and outgoings of cash in our business. It's the cash coming in through sales or funding from grants or what we're paying to our employees or in wages or expenses, or even the money we're paying to invest or repay some debt. So whether they're buying new plant and equipment or repaying a loan. Cash is important because it's that oxygen in our business that keeps the business alive. So without cash, the business will struggle and we won't be able to continue on very well. So it's an oxygen for our business. Proper cash flow management is critical for our health of our business. Okay, so if we're managing our cash flow well, we'll be certain of how we're going to perform in the near future, in the longer term, and be prepared if we're aware that we might have a funding gap. Cash really allows us to meet our financial commitments. No one really wants to do business with us unless we've got cash or the capacity to pay cash. And look, cash is important because if we control our cash really well, it can open us up to better funding opportunities. The banks will really appreciate it if we're good at managing our cash. And of course, increases our business value. The value of a business is really importantly linked to the way the business generates cash. So knowing how we can have a business that generates sustainable cash and effectively controls that would increase our business value. So in cash flow, like all accounting things, we have lots of terminologies that we use. Some of these are relatively commonplace. Some of them we might be hearing for the first time here. So we've got a cash flow terminology sheet in the activity pack on page 5 there. So we cover things there that's really good for reference for the future. So take that away and understand what some of these terminologies you're using when you're talking to your accountant or other people, whether it be your bank manager or suppliers. So we're talking about cash flow or a cash flow forecast, that projection of our cash flow, of the money coming in and out of our business over a period of time. Our cash position, how much we have, our free cash flow, that cash generated by the business after covering all the expenses and investing for our future growth. So that's generally something that's really important when we're looking at the health and the value of our business. And operating cash flow is another critical one that we look at quite often as accountants, as advisors and bank managers. It's that cash generated by the operating activities of the business. Okay, so these are some really good terminologies to know and understand and refer to as we go through today's session and refer to going forward. So we've got a quick poll here. We don't have any interactive polls in this session, unfortunately, but maybe just a quick show of hands. If you can use your hands to raise the hand function in Microsoft Teams there. How confident do you feel about managing cash flow? That's clearly a consideration because you're here right now. So just a show of hands, maybe, of how many people are extremely confident of managing their cash flow. How many people have we got there raising their hands for that? So I'll throw my hand up. What about somewhat confident? Many people out there that are somewhat confident with raising their cash flow? Neutrally confident? Somewhat unconfident, or not at all? Yeah, there's quite a few hands going up there for the last one. So there's a lot of things that make us as business owners somewhat unconfident and not very confident about managing our cash flow. So we'll cover off quite a few things today to help you better understand cash flow and come up with some strategies that you can implement in your business going forward to help understand your cash flow and manage your cash flow better. So we've got an activity pack here. This is our first activity for everybody. This is an activity to understand how cash flows through our business. Okay, so we've got those 3 main reports. We've got our profit and loss, our balance sheet, and our cash flow statement. And the other critical thing here is our GST payable. So you'll find this in your activity pack. And we've also got a case study that goes along with this. And I'll be calling out for some people to contribute to some of the answers as we go through. I'm not going to give you all the answers. I'd really love it for people to chuck their hands up, take the microphone off mute, and have a go and tell me what you think the answers are. Okay, so if you go to your activity pack, we've actually got on page 7 a case study of our Savvy Sally's Creative Studio. So Savvy Sally is our fictional business here that we're helping understand cash flow. And on page 8, we've actually got a copy of this this spreadsheet here to help us complete. And it should be interactive. Should be able to access that in your PDF. Okay, so we've got some scenarios here for Sally. Okay, so Sally is trying to understand her true financial position. She started up her business. It's her first year. And she put a summary here together in relation to her business activities in the first year. So you'll find that on page 7. So let me fire up and work through with you here the activities we go through. So here we are on page 7 and the control your cash flow activity pack here on page 8. Okay. So straight up, we've got Sally. She started a business, and the first point we have here is start-up capital. Now, Sally started the business by investing her personal funds of $5,500 into the business, and she did that to buy furniture for her home office. Okay, so Sally is introducing personal funds of $5,500. Does anyone want to just jump in and tell me what they think the first cash flow that her business will see when she does that? Feel free to jump off mute. Tell me where you think we're going to record in a cash flow statement, GST payable, profit and loss, or a balance sheet. All right. First one's always the hardest, so I'm going to help you out. Oh, Di, did you just put your hand up? Or DJ, is that right? Did you want to have a crack? Oh, I can see some comments.
Yeah,
Sally is there.
Can you hear me?
Yes, go ahead.
This is Dan. I'll go with cash in of the 5,500, and then to the balance sheet of an asset.
So Sally's funds, cash in 5,500, and then on the balance sheet.
And yeah, the cash in or cash account.
Yeah, so Sally's funds come in, that's cash flow in. I agree with that. What actually happens is what we got here on our is our cash flow over here. On our balance sheet, we're actually going to have a loan from Sally. Okay, so Sally's contributed from her personal funds money into the business. So the cash is received into the bank statement in our cash flow statement, and we record on our balance sheet the loan from Sally of $5,500. And thanks, Chloe, for unmuting everybody. Yeah, so Belinda said owner equity, similar. Generally, the owner's equity in a business might be the money we pay up for the shares in a company. But generally, if we loan money in, we'll record that as a liability in the balance sheet. The business now owes Sally $5,500. Okay, so also in that line, Sally invested personal funds to buy furniture for her home office. Okay, so now we've got the cash in of 5,500 and the business owes Sally that loan of 5,500. Sally goes out and buys $5,500 worth of furniture for the office. Anyone want to have a jump in and have a crack at what we want to record in our cash flow statement or our profit and loss or balance sheet report? See, we've got a lot of hands up. I assume everyone's still answering the previous poll. Okay, so if anyone wants to jump in, have a crack, fill it in on your spreadsheet and let me know what you've got. So we've got Jessica jumping in there, $5,000 cash out and 5,000 asset and balance sheet. That's close. Sharon saying something similar. Asset, office furniture, credit, Sally loan. Okay, so there's a mix of ideas there, but what we're doing is Sally's going out to buy furniture, so she's paying 5,500 for the furniture. So 5,500 is the cash out. So furniture. Okay. I think Jessica's right. She said we've got a $5,000 asset in the balance sheet. Now, why is that $5,000? Now it's because the GST, we're spending $5,500, but that's GST inclusive. So we get to claim back the GST and we record everything in our profit and loss and balance sheet exclusive of GST. So we'll have office, furniture, $5,000. Now we had 5,500 go out of our business and we've only recorded office furniture of $5,000, and Belinda's got it right. GST, exclamation mark. Thank you, Belinda. So GST payable report. Now we've paid the GST to the supplier of the office furniture. So we'll have in here office furniture $500, which is the GST on that furniture that we paid. Okay, so the cash gone out of our business, $5,500 worth of cash, but we're only recording $5,000 worth of office furniture in our balance sheet. But we've got a credit for, yes, Laura, that's right. We're assuming we're registered for GST. So office furniture, we're going to claim a credit of $500 for that office furniture. So hopefully when we lodge our BAS, we'll remember to put that in and get that money back from the ATO. Great. So that's the first two bits of cash. The next point, we've got some sales and accounts receivable. So in the whole of her first year, Sally issued a total of $110,000 worth of invoices, which is inclusive of GST. Sally also received $7,700 in cash by the end of the financial year and was owed $33,000 by her customers. I'd love to hear a few things going on there. Any suggestions about what the first thing we might want to record in our cash flow statement, our profit and loss, or our balance sheet report? Feel free to unmute and jump in or type something in the meeting chat. Fill in your own spreadsheet as you go through as well. So have a go at where you want to put those items. $110,000 worth of sales invoices. We've got $77,000 worth of cash received at the end of the financial year and owed $33,000 by customers. Right, work through that in your spreadsheet and shout out when you think you've got the right answer. So we've got Margaret saying trading income. Yes, Margaret, trading income, that's right. How much trading income do you think we're recording, Margaret? Okay, Belinda's chipping in. We've got some information coming there from Belinda about cash in, 77,000, balance sheet, 33,000, accounts receivable. Okay, all looking like some good answers. And Jessica, yes, there's a worksheet that we've got a download link for you. If Chloe can just jump in and shoot you those details. So look, I think we've got some combination of information here that's right. So Margaret's saying trading income, but how much trading income? So we pop that in, we'll go sales. Margaret's saying $77,000 worth of trading income. I'm not quite sure that's right, Margaret. We've received $77,000 worth of cash, which is what Belinda said. So we'll pop in cash in of sales. And we've got 77,000 that we received from our sales. And Belinda also said we have accounts receivable of $33,000, which is right. So we've issued invoices and we've received $77,000, but we're still owed $33,000. So accounts receivable, $33,000. Okay, so we need to record sales. So Margaret's telling us sales, trading income. We've got $110,000 worth of invoices will be issued, but that includes GST. So our total sales should be 110,000 less the GST, which is $10,000. So we're going to put $100,000 worth of sales into our profit and loss report, because everything in our profit and loss report and our balance sheet is excluding GST. So Michelle, yes, Sally is registered for GST. So any sales that she makes, she needs to record GST on. Very unlikely that she'd be making anything in terms of her sales that doesn't have GST on it. Okay, so we've issued $110,000 worth of invoices. 100,000 goes in as our sales income, and 10,000 goes in as GST that we've collected on our invoices. So the GST that we had on those sales invoices, $10,000. Okay, so we've got the 110,000 in invoices, 100,000 as sales, 110,000 as GST. We received $77,000 in cash, and we're owed $33,000 in our accounts receivable. Okay. So the next point is materials and services. Sally purchased materials and outsourced services worth $22,000, which includes GST. And during the year, she also purchased $5,500 worth of computer equipment, again, including GST. So here, again, yeah, Sally is registered for GST. She should be eligible to claim GST credits on everything she acquires, all the amounts are GST inclusive. Have a look and think about where everything would be going into that spreadsheet. What's the cash flows in, cash flows out, our GST payable, the profit and loss amounts, or balance sheet amounts, okay? Have a go, fill in your worksheet in your workbook and sing out when you think you've got an answer. Okay, so we've got the purchase materials and outsourced services of $22,000 and also $5,500 worth of computer equipment. So we've got two different things we're considering here. Anyone want to jump in with the first part? Feel free to jump off your mute and have a chat or type something into the meeting chat box. Okay, I'll give you a hand here. This one's a bit more, two different things happening here. So a bit more going on. So Sally purchased materials and services for $22,000. So that's cash going out of the business. So we're just going to pop that in services. Cash out $22,000, including GST. Now I know we've paid GST, so I can put the GST that we paid here as well. Services, $2,000. We can claim that back from the ATO later on. And then where to put the materials and outsourced services. We've got Nikki saying 22,000 under expenses in our P&L. Yeah, Jessica, I agree with you, Jessica. We've got GST we need to take out of there. So yeah, materials in the P&L of 20,000, GST paid 2,000. I think Belinda's got that perfect as well. And thanks, yes, Jessica. Okay, so we've got the services in our GST of 2,000, and we'll have materials here for our $20,000, which is excluding our GST that we've going to claim back on our BAS. Great, so that's the first part. The next part, we also bought $5,500 worth of computer equipment. So again, we've gone out, we've paid cash for this. We've got some cash flowing out of our business. I know that for sure. We haven't got anything on credit, so we would have equipment of $5,500 flowing out of the business. Anybody want to throw an answer into the meeting chat? Here we go. Jessica's back on it again. We've got $5,000 asset in the balance sheet and 500 GST paid. That's correct. Okay, so We've got our computers, $500 worth of GST, and we bought an asset. This is where I'd love to throw out a question and say, why is it an asset and not an expense? So normally when we're buying things for our business, we might put them in our profit and loss as an expense. Yeah, and Lisa's kind of got it right there, because you can depreciate it. And DJ's saying the same thing, depreciation. So the key here is we've got computers, and yes, we can depreciate it. But the key here is that we owning the computers, and the computers are going to last us a long time, and we're going to use them over time to generate income in our business. So it's actually an asset, and then we will depreciate it over time, okay, to show that we've reduced the value of that asset as we've consumed its life over its period. Computers only last for a few years, so we'll depreciate that relatively quickly. So we've got the equipment cash flowing out $5,500. We paid $500 worth of GST, and then in our balance sheet, we put in the computers there of $5,000. Okay, so our next point is motor vehicle and finance. We've got Sally purchasing a car for $33,000, including GST. Okay, maybe we can see that a bit better if I do that. She was able to finance the full amount through the bank. And over the last year, she paid $500 a month in motor vehicle loan repayments, which we're going to assume is 50% principal and 50% interest. Okay, so we've got a few things happening here. We've bought a motor vehicle. We've obtained some finance for the full amount. We're making repayments on the finance, that vehicle loan. Yeah, Nikki, great question. I'll let everyone work through that question, that motor vehicle and finance point. But to answer your question, Nikki, the computer equipment and the office furniture are things that we own. They're assets. We've gone out, we've got something tangible in our hands that we're going to use over a period of time. Okay, so we're going to own them. If we wanted to sell our computers tomorrow, we could sell them. We might not get the full $5,000 back, but they retain value in our business. So they're actually an asset. We can either use them and consume them over a period of time, which we might do with computers and replace them after a few years. And we might do the same with the furniture. We might need to replace that after a few years. Okay, but they're going to last us a long time, and we're going to use them, and they're going to retain their value. Our materials and our services, or things that we might consume in our business, like paper and pens and stationery, that's profit and loss expense, because we buy them and then consume them pretty much immediately as part of our business. We'll consume them during the year. But the computers, they're an asset because we're going to get some value out of them. They're going to retain some value. We could possibly sell them in the future. It's quite a common error to put things like furniture and computers through our profit and loss and not understand that we actually have some value in the things that we own and are sitting around our office. Okay. So back to the motor vehicle and finance. So we've got a car, we purchased it for $33,000, including GST. We financed it in full, and then we made some motor vehicle repayments. Anyone work through that problem and have an answer for me? It's a slightly different concept here. Yeah, Nicola's right there. Got some comments about trading stock. Okay, Jessica, saying we've got an asset in the balance sheet of $30,000. That's right. Just like those furniture and the computers, the car is an asset. We're going to own it for a period of time. $3,000 worth of GST and a loan liability of $33,000. Spot on. So we've got a car, $30,000. We've got GST paid on that car of $3,000. We're going to have a loan, $33,000, because that's the amount we borrowed from the bank and paid to the car yard. Okay, so then we've paid over the last year $500 per month. So that's $6,000. Okay, so we paid $6,000 repayments on our car loan. 50% of that is principal and 50% is interest. So we need to figure out where that goes in this cash flow spreadsheet. Does anyone want to jump in, contribute what they think the answer is there? I'll kick off with the really easy part. We've got cash going out because we're paying it back to the bank. Yes, thanks, DJ. So we've got loan repayments of $6,000. Yeah, Lisa, good one. That's interest expense. So going in our profit and loss of $3,000, that's 50%. What about the other 3,000? Lisa, liabilities, $3,000. Yes and no. So liabilities, we're going to put the loan repayments in here. It's not going to be $3,000 because we're repaying the liability. It'll be negative $3,000. Okay, so we're reducing our liabilities by making those repayments. Yeah, no, that's fine, Lisa. We're just going to make sure if it's a positive or a negative. So when we repay the liability, it will reduce the amount. The other way we could show that is just to change the car loan from $33,000 to $3,000. But I like to show it this way. Okay, so spot on. Thanks for the help there, DJ, and thanks, Lisa. So the next point, running costs and general expenses. Sally also paid $550 per month, including GST, in the running costs and general expenses. So $550 a month, that's $6,600 over 12 months, including GST. That's for running costs and just general expenses. So any thoughts where that might go into our worksheet? So again, I'll give away the easy part. We've got cash going out of $6,600. And Lisa's jumping in again as well. Expenses. Yeah, that's right. So we've got expenses, general expenses. And how much for though, Lisa? Anyone want to jump in and tell Lisa? Will give us a hand and find out how much we want to record. Jackie says $6,000. Yes, Jackie, that's right. And where's the other? Where's the? Yeah, spot on, Lisa. You think correctly. $6,000 because it's GST exclusive. So that means we're going to find the GST. So general expenses, $100 of GST that we paid. Okay. And then we round out that. We've got nothing else. We've got assumptions about Sally's situation. So the business operates as a company structure. We didn't have any employees in our first year, so we're just a sole trader. And Sally hasn't paid herself a wage. Sally's works from home, so she keeps the expenses down by not needing to pay rent or any other office expenses attached to that. So this is our situation. We've got cash in, cash out, GST collected and GST paid, income, expenses, assets and liabilities. Now we're not quite there because what we need to do is then calculate the totals at the bottom. Okay, so our opening balance is zero. We've got $82,500 worth of cash in, $45,600 worth of cash out. Oops. Which means we've got a closing balance of $36,900 cash at bank. Now, we mentioned before, cash at bank sits in our balance sheet as an asset, and we've got a line up here, cash at bank, where we can pop that number in, $36,900. Okay. Then our GST payable report, we collected $10,000 when we issued our invoices. We need to report that to the ATO and we owe it to the ATO at some stage. And we paid all of this GST when we purchased all our assets and paid all our expenses. So we've got a total of $6,600 worth of GST. So our net GST payable to the ATO is $3,400. Now, GST payable to the ATO is actually a liability, and we need to record that also in our balance sheet. So we'll pop that into that spare line for $3,400. Okay. Now, our profit and loss report, we've made sales, total income of $100,000, and our total expenses of $29,000. So our net profit is $100,000 minus $29,000, $71,000. And then our balance sheet, we've got total assets of $109,900, total liabilities of $38,900, which means our net assets of our business is $71,000. Okay, so all of our profit in the year has gone into increasing the amount of assets that we hold in our business. Okay, so hopefully your spreadsheet looks a lot like this one here. Okay, we've got closing cash of $36,900 and a net profit of $71,000. So quite often people say, well, where did my cash go? I've made $71,000 worth of profit in my business. Surely I should have $71,000 in my bank. And in this case, it's very obvious we don't. Okay, so quite often our profit doesn't equal our cash. And that's probably one of the number one big mistakes that people make when they look at their cash flow. They look at their profit and loss and think, that's the cash that I've got to spend. Or they look at their cash at bank and think, that's the profit that I've made during the year. Now, it's not often that they line up. And the difference really here is we've utilized some of that cash to buy assets. We've also borrowed money from Sally and from the bank to help us acquire those assets or pay for expenses as we've gone along. Okay, so we really need to look at cash flow in a different context and different light to the profit we're making in our business. So there's a final point here, and Sally is preparing for the coming year. Now, Sally would like to pay herself a salary, and by her estimate, she thinks she needs $30,000 to cover her personal living expenses. But she doesn't think that should be enough to pay her full salary, but hopes to cover just those expenses with what's left over. So what do we think about that? Do you think there's any issues with Sally paying herself $30,000 worth of salary? Is there anything that Sally can do to help pay that salary? Is there something maybe in here that we probably haven't thought about? Any thoughts? Can Sally pay herself $30,000 comfortably? I like your thinking, Jessica. And DJ, yeah, great comment. So yeah, if I've got $30,000 in my bank, I can repay my loan. Okay, so business owns Sally $5,500, which we can see here. We can use some of this cash to repay that loan, which is great. First, we need to make sure we've got enough cash flowing through the business to be able to repay that in a lump sum. So DJ's point is great. Collect your accounts receivable quicker. We've got accounts receivable of $33,000 sitting in our balance sheet. If we collected that from our customers quicker, we'd have another $33,000 sitting in our bank account. Yeah, Belinda, you're right. There's other things to consider when you're paying wages. PAYG withholding, superannuation. So we need to really look at where the cash flows with some of these expenses. That's a really good comment, Belinda. I really like that. There's more than just certain considerations. It sort of leads me to say there's probably something that's not in here, and that's tax. If we're a company and we're paying company tax at the small business company tax rate, we're going to pay 25% tax on that net profit. So one thing Sally hasn't taken into consideration is the fact that she's going to have to pay tax to the ATO of 25% of her profit. And then the ATO will ask you to make PAYG installments on future income in the future. So we'll cover that a little bit later in today's session. So there's a lot of things that Sally needs to consider. There's also car loans she's going to have to make in the future. She doesn't quite know what her future sales might be. She hasn't projected what her expenses might be in the next 12 months. So Nikki asks, what would you do if the GST paid to the business was not registered for GST? Well, we wouldn't actually use any GST payable report. And all our numbers would be inclusive of GST in our profit and loss and balance sheet report, because we can't claim GST we pay back from the ATO, and we don't need to charge GST on our invoices. Okay. So the numbers would be slightly different. The cash going in and out would be pretty similar, because everyone's still going to charge us GST on the car, on the equipment, on the services, and on the furniture. But we just wouldn't be able to claim it back from the ATO when we incur those costs. Okay. Any other final questions before we move on? Feel free to shout out, take yourself off mute if you want to make any comments, or drop a few comments in the meeting chat. All right. We're going to move on. Sally's done a great job there, showing us the difference between the profit and our cash flow through our business, and understanding how the cash flows through our business as we buy assets, borrow loans, issue our invoices, collect those invoices from our customers, and also incur those expenses. So there's a lot of things to consider when we're running a business about where our cash is going to, coming from, and how we collect or pay those cash amounts out. Now, there's quite a few common cash flow mistakes we see in business. Now, we spoke about cash flow, cash being the oxygen in our business, and cash flow is that lifeblood. Okay, we can't function without cash flowing in our business. So it really benefits any business to be able to forecast the cash flow we're having, and what we know we're going to receive, or what we have to pay out in the future. Do we have enough cash put aside for those larger obligations that are going to turn up in our business? Is there anything unexpected? Do we have a buffer that can help us out with anything, or do we need to cut back on certain discretionary spending? So the most common cash flow mistakes we see is not planning for the timing of cash. Just because cash is in our balance sheet, in our bank account, doesn't mean it's ours. There's sometimes some times where we see that we might have to pay some of that cash out in the future. Sharon's got an interesting question. If you own all your equipment and car when working out of your home office and you work remotely and travel around Australia. I'm not quite sure what you're asking there, Sharon. Now, another key question here is thinking the profit is the amount of cash that we can withdraw or spend. Okay, so as we saw before, our profit in our profit and loss statement didn't equal the cash that we had in our bank account. Things like collecting those accounts receivable, our loan obligations, really doesn't give us a good indication of what we can withdraw or spend from our account. Not meeting enough cash put aside to meet those tax obligations, and I think we had a really good comment also about superannuation obligations, PAYG installment obligations, and withholding on employee wages. So make sure we're putting enough cash aside for those future obligations with the tax man. Spending cash too quickly and not collecting cash fast enough is another huge mistake. So letting those accounts receivable sit on the balance sheet and not collecting them, and then withdrawing more cash than the business can afford. So we might be able to repay the loan to Sally in that example, but the question is, can we afford to pay that if we have some other expenses that are coming up soon? So another quick poll, bit of a show of hands. These are a lot of cash flow challenges we hear from people in business owners. What is your biggest cash flow challenge right now? Is it, show of hands there, for not having an accurate cash flow forecast? I know a lot of businesses starting out don't really forecast the cash flow in a proper manner, or do it in a really effective way. Yeah, quite a few hands there. Feel free to make a comment. Great opportunity to take yourself off mute and tell us about the challenges you have with cash flow forecasting. What about managing the timing of cash? Those future obligations, paying things to the ATO or paying superannuation for employees or even for yourself. What about show of hands for putting, oh, sorry. Can everyone make sure they're on mute, please? What about putting enough cash aside to meet those financial obligations? Another problem is collecting accounts receivable in a timely manner. I know this is a big problem for a lot of people, particularly when other businesses are struggling to pay their debts to their suppliers as well. So those other businesses that owe us money, we've given them the credit, can be a big challenge. What about a show of hands for embedding a cash flow process in my business? Yeah, Jackie's saying it's hard to collect from hospitality. Really, really hard. And Michelle's got a similar problem with service delivery. Lots of bottlenecks. Yeah, it's very hard when the service deliveries can't be met. Anything else? Post that in the chat now. We've got some really, really good comments there from Michelle and Jackie about what's going on, their challenges. If there's anything else, what's your biggest cash flow challenge? If you haven't thought about it, have a think about it and think about what we can do with all the information that you're about to receive in your business to help you meet the challenges you're seeing. Yeah, Nikki, COVID's a huge challenge for cash flow, huge challenge for all sorts of different reasons. Okay, so we know we've got issues. How do we improve our cash position? So we're going to go through some common cash flow levers that we can use in our business to help us improve our cash position. So in the activity pack on page 9, we start going through all of these levers. Okay, so we've got 7 levers we talk about to positively influence the cash flow in our business. Okay, so these are pricing and volume and accounts receivable. These things help us bring cash into our business. And then to help us reduce the amount of cash going out, we can look at our assets, our expenses, our inventory and our staffing. Okay, sometimes a little bit harder to control certain things depending on the type of business we have. Every business is different. Every business has different challenges, but there are a lot of similarities in the way we can deal with things and manage particularly our cash flow. So the first of these levers is our pricing lever. We need to make sure we're setting the right price for our products and services. Setting the right price is going to improve our cash position and also help us maximize our profits that we make in our business. So can we look at the pricing of our products or services and see if we're pricing what we do correctly? Can we increase our price in a way that's not going to impact on customer demand? Any increase in price that we can pass on to customers will have a positive impact on our cash flow because we're literally charging more money for our services or our goods, and that'll increase the amount of cash in every sale. So, pull this lever by increasing your prices, changing that pricing structure. So how do we incentivize people to pay more for different services that we offer or different products we have as a bundle? Do we have additional revenue streams that we can tap into? So is that, something different that we can offer to either existing customers, or can we change the customers we're selling and find additional customer revenue streams for what we already do? So can we increase the value do we deliver to justify the price increases that we're doing? So is there something we can do that can justify those prices and still maintain the customer demand that we have for our service? So some really interesting concepts. Every business is going to be different in terms of how they pull this pricing lever. Looking at DJ in the last cash flow example. So Savvy Sally, should you have included the uncollected receivables? So uncollected receivables is in our assets and our balance sheet, and that's probably one of the levers we're going to talk about shortly in terms of how do we increase the cash coming into our business. So DJ, yeah, that's a really good, interesting question. So pricing is all about how can we charge more for what we provide as a business, either through increasing our prices or looking at how we structure the pricing of what we're doing in our business. So many businesses we see are undercharging for their products or services and understating the value that their customers place on what they're doing. So it's a really good opportunity to have a look at pricing. We worked with a veterinary surgery recently in our business growth program, and they suggested that they haven't increased their prices in probably 3 or 4 years. They reviewed their pricing structure, increased their prices in a meaningful way, and they were able to increase their cash coming into their business from the sales that they were making, and also increase their profitability, particularly through COVID, where demand was actually increasing for certain things like veterinary services. And Michelle, you're right. Every business is different. If you're stuck with working fixed price contracts or tenders, then yes, it might be difficult to increase pricing, especially for existing contracts. There's probably not much you can do, but really probably good to look at how you're pricing for future contracts and future tenders to make sure that your pricing model is correct and that you're actually deriving the right value for the services that you're providing. So whether that's you're undercharging compared to your competitors, or you can package in things to make the pricing better for you under that contract or tender. So the next lever we can pull is that volume lever. So increasing the number of products or services that you offer, and selling into new markets to increase the volume of sales we can generate. Okay, so how do we increase the number of customers? How do we increase the number of things we're selling to each of our customers? Are we looking into new markets, new niches or territories? Can we find people who haven't heard of our business or could potentially use our services in a different market? And can we improve our sales conversion process? So can we optimize that funnel of new leads and new business coming into our business to make sure that we're converting more of those opportunities into sales? So all these things are things we can do to look at changing the amount of products and services we're selling, either to existing or new customers that we're bringing into our business. The third lever here to increase cash coming into our business is this accounts receivable lever. So we looked at this with Savvy Sally, collecting those payments from our customers as quickly as possible to improve our cash position. So we saw Sally made $110,000 worth of sales, but over the course of 12 months, she only collected $77,000 of that cash. Okay, 1/3 of her sales for 12 months was still outstanding and was just cash that should be in her bank account, but was still sitting with her customers. So make sure we've got those clear credit policies and credit checks before we're setting up any accounts with customers. We're not trying to be a bank for them. We need to make that a priority that what we're owed, we're collecting on our terms at the earliest possible convenience. So how can we pull this lever? We want to look at, can we invoice earlier in the cycle? Is there an opportunity to make sure we're not forgetting to invoice and then doing it at a later time, and deferring the time of the invoice defers the time of the payment? Are we following up on our overdue payments? Can we do that more frequently or more effectively by probably using technology to automate the accounts receivable process? Can we set in a process of following up through emails or automated contact with our customers when certain milestones are met in terms of overdue payments? Can we change our payment terms? I know this is probably a tricky one depending on our business and who we're dealing with in terms of customers, but setting those payment terms is something that's more favorable to us, particularly if we can include an early payment discount. Now, this is a really interesting option that we can include to incentivize people to pay sooner, to get the cash flowing through our business sooner. It might cost us more money to wait for someone to pay the full price compared to giving a discount to make sure people pay on time. Save us running around and spending time and resources chasing those payments or engaging credit collectors to follow up on our behalf. Having the cash in our business is very, very valuable. So that's a consideration we can do to increase the accounts receivable lever, increase that cash coming into our business. So feel free to throw any comments into the chat about things that you're doing in your business, whether you have tried these things, whether there's any opportunities you haven't looked at and you're considering trying. Yeah, Michelle's talking about automated email reminders for accounts receivable. Such an easy thing to implement these days with the technology that's available out there in the market to automate that process. Sometimes people who owe us money just need a friendly reminder. And if we can automate that, it makes life a lot easier for us. So thanks, Michelle. Okay, so quick poll. Just put in the meeting chat right now, which cash in lever do you think you would most likely benefit from implementing? Just type that into your meeting chat right now. Is it the pricing lever? Is it the volume lever? Or the accounts receivable lever? Yeah, thanks, Sharon. Pricing lever. Sure, that's a really interesting comment about pricing terms. Yeah, people generally react quite quickly to comments like that. So lots of love for pricing, volume, accounts receivable, pricing and volume from Chris. So there's a lot of different opportunities. So have a look at the lever cards that we provide you in the activity pack. There's some really, really good comments and tips on each of those to help you think about how you can apply those levers directly in your business right now. So volume, pricing, accounts receivable all seem to have just as much love for each other. Okay, so once we look in those cash in levers, we can start looking at the cash out levers to see how we can reduce the amount of cash going out of our business. The first one we can look at is the expenses lever. So reducing those costs and overheads will immediately free up our cash. So if we spend less, there's less cash going out of business, we've got more to spend on things that are important. Okay, so scrutinize our operating expenses. Look at our profit and loss. See where our money is actually going. So Sharon, happy to take a question after the session. We might have some time to talk about pricing and benchmarking at the end of the session. So cash flows type, have a look at your profit and loss and review it regularly. What are things going through there that we don't need? If we're tight for cash, what can we cut back from really quickly? Reduce that discretionary spending. We always recommend to businesses, if you are spending money on things that are not essential for your business, it might be fine to do that. You can do that as a business owner, but make sure you keep a really good track of what it is so that if you're in a tight spot and you need to instantly increase the cash in your business, you can reduce that discretionary spending quickly. Yeah. Other one is looking for that potential 1% reductions in things that are going through our business expense overheads. Is there a way to renegotiate our telephone contract? Our electricity contract is a huge one at the moment. There's plenty of suppliers around there in the market offering services to help us reduce our electricity bills. When was the last time we looked at that? When was the last time we looked at our telephones or our subscriptions? What are things we can reduce that we're no longer using but still paying for? And can we renegotiate some of those recurring expenses that are going through our business? Michelle asks, what's the number one easily fixed mistake you see? Currently, that's a great question. Currently, we see a lot of people paying for subscriptions in their business, particularly for software as a service, for subscriptions into various platforms of software that we might be using in our business or other types of things. And generally, as the business, we lump them into one account and just call it subscriptions. One of the easiest things we can do is have a look at that account, break it down into what we're actually spending on different types of things and see if there's stuff that we're paying for that we're not actually using in our business anymore. Are we no longer using that software, but because we signed up for a contract and it comes out of our bank account every 12 months? Yeah, audit the subscriptions. It's really, really good way to start looking for savings in your business. You'll be surprised what you could potentially find in there. But absolutely, like electricity is an amazing one because there's so many great deals going on with suppliers, particularly with the growth in solar and alternative energy sources, and the change in the prices of electricity in the marketplace is a huge one at the moment. So have a look at those two. They're really, really good ones to look at quite easily. But have a look at discretionary spending as well. Can we put something in place, particularly as a business owner, to reduce what we're doing there if spending's tight? So here we've got a really good example of looking at a profit and loss statement. So we're looking at anything that we can see here that's not critical, anything that we can defer to a later time or just get rid of altogether. Is there something we can renegotiate quickly? You know, is our Facebook marketing, are we just still paying the same amount every month? Is it actually being effective? Is that leading to increased sales? Can we measure that and confirm whether that's worth doing? Same for that search engine optimization support. We're spending $1,250 a month on something that's actually converting sales into our business. And just try and find those things in our profit and loss that can stand out based on what we can see. So yeah, subscriptions, insurances, rents, and those utilities, that phone, internet. Can we talk to our phone provider and get a better deal on what we're doing? Now, next level we see is the assets lever. An interesting one to consider, we've probably not thought about by most businesses, but underutilized or unnecessary assets actually can tie up cash or be put to better use in our business. Okay, so do we have a car that we spent $33,000 on that we don't use or don't need? Can we sell that? Or can we repurpose that to somebody else who could use it in the business to help them do their jobs and generate more income? Could we lease that car? So sell the car and lease a new one for less money each month over a longer period of time to free up some of that cash in our business. Okay, so what we should do is review our balance sheet regularly, and this is where it's key to understand what's an expense and what's a balance sheet item. You know, other things in our balance sheet we could sell or repurpose if we've got an asset that we're not really using. You know, can we sell a spare car? Can we change the way we finance things? Can we change our loans, renegotiate a loan, or find new ways we can utilize assets that we're not fully utilizing in the business, or use it in a way we can generate additional income. We worked with a business recently who was in manufacturing, and they found that a lot of the scrap that was coming out of their materials was not being utilized very well, and they found an opportunity to turn the scrap into an asset that they could then sell in a different market. So it's really applying a few different levers there, finding new markets for things, but also finding things in our business that we can generate income from. Okay, so that assets lever is a really, really interesting one and really requires us to investigate what's in our business in terms of an asset, how are we using it, and what options we have to make better use of, or change the way that we use them, or change the way we finance those assets in our business to free up free cash flow. Now, the next level we have here is our inventory lever. If we're a business that buys and sells goods as part of our business, we're going to carry inventory, and maintaining the right levels of that inventory is essential. We need to know our customers' needs and make sure we have enough inventory as close as possible as the time of sale. So it's really, really hard at the moment for a lot of businesses with COVID and shipping restrictions and the issue of getting stock in and out of the country or around the country. So really more critical than ever to make sure we've got the right levels of inventory on hand. So can we reduce the amount of stock or materials that we're using in our business and carrying on hand at any point in time? Can we renegotiate those terms with our suppliers? Can we clear and get rid of that obsolete inventory or slow moving inventory by just selling it at a discount price and getting it off our balance sheet and turning it into cash straight away? Or is there something we can do in our ordering process to change the way the cash flows in terms of the working capital requirements for buying stock, holding stock, and then selling stock? What's that time it takes us to turn our expenditure and our inventory into revenue from our customers? So that's that inventory level. Not relevant to all businesses. Not every business carries inventory, but if you are a business that has inventory or carries materials on hand for what you do, really, really important to make sure we're not investing a lot of cash into excess inventory and getting the right price for what we're paying for our inventory and materials. And then the final lever we have here is our staffing lever. Now, this often gets a lot of comments about reducing staffing costs and the way we do that. Now, it's not necessarily about reducing staff or cutting wages, or it's about getting the staff mix right. Do we have the right staff, the right rostering, and getting the utilization of our staff correct so that we are getting the best value and best performance out of the staff that we have in hand. Now, this is important at the moment because staff shortages are causing issues just as much as the staff costings. So the ability for us to maximize the utilization or productivity of our staff so we can do more work with the same amount of staff cost, or if we can change up our staffing mix so that we've got the right people in the right jobs getting paid the right amount of the value that they create in our business. Can we do things to make sure that staffing matches our demand as our demand goes up and down through our business cycle, whether it be through the year, through the week, or even through the day, by just reviewing how we employ our staff and the hours that they take? It might be more beneficial to put people on full time compared to part time, or maybe more beneficial to go the other way when we're looking at new hires. So staffing is a really interesting lever, sometimes very hard to pull for businesses in the short term, and can be more of a longer term strategy to try and get our staffing mix right for our business. But definitely one to be looking at, because staffing is often one of the biggest expenses we have in any business. Okay, so I know we've got a big group and it's very hard to have a quick chat, but just want to give the opportunity to have a 5 to 15 minute chat about those 7 cash flow levers. It'd be great if anyone out there wants to jump off the microphone and tell us about their business. What are the things that you're seeing as a challenge in your business at the moment? We're not going to jump into breakout rooms today, but it'd be really nice just to have a chat, open up the microphones and hear about what people are doing in their business and what levers that you could be using and applying to your business right now to help solve your cash flow problems. Okay, there's plenty of room on page 17 there, the activity pack, to write down some ideas and some takeaways that you hear, things that you can probably use in our business. But I really love a really brave person to jump off their mute, get on the microphone and have a chat to us about what cash flow levers they can use to solve some of the cash flow issues they're seeing in their business right now. Does anyone out there want to lead the pack and be brave? Nicola.
Hey, yeah, look, it seems like a really obvious thing, but we had a problem where we were sending our invoices to the wrong person. So
wow,
we need to send it to the person who's got the money to pay them.
That's a really interesting one. And Nicola, I don't think you're alone in that. And that's where we're talking about the whole accounts receivable process and making sure we've got really good processes in place to make sure we're doing the right thing and sending to the right places and the right person to get paid. That's very interesting. Have you got that resolved now?
Yes, no, we do, and we got our money, so it's all good.
Oh, thank God for that.
Yeah, there were a few sleepless nights.
Yeah, where along the process chain did you find that you're going wrong, and what have you done to improve that?
So I think it was just a conversation that the salesperson had with their contact, and they said, "Oh, we haven't seen any invoices." And he came to me and he said they haven't seen their invoices, and I was like, "But I've sent them." And so then we worked out through that process that we didn't have the right, we used Xero, so we didn't have the right email address in that automated invoice send function. So now I'm very strict on getting that right when we set up clients to do invoicing in Xero now.
Yeah, and very important part of the process. And important that we got a good review process as well to make sure we're picking up that we're still getting it right on an ongoing basis. So if we weren't looking at somebody's invoicing piling up, we might not have missed it until it was too late. So thank you, Nicola. That's great. Thanks for sharing. Looks like we've got a few comments coming through the meeting chat. Where can I start off? Tanya, do you have any ideas, plan to put staff on? I need to increase productivity with extra staff. How do I ensure we have the right cash flow in order to make that happen? Tanya, you feel brave enough to unmute and discuss this? Ideas on how to plan to put staff on.
I'll be brave. Yeah, I'm a speech pathologist and wanting to grow my practice, and in order to do that, offering more services would increase cash flow. but how do I plan for that and have that cash, you know, in the first place?
Yeah, really interesting question. And how many employees do you have at the moment, Tanya?
So I'm currently sole trader and wanting to increase. Yeah.
Yeah, the two things that jump to mind is it's really, really hard to find staff at the moment in almost every industry and profession. So that's probably the biggest hurdle. And the cost of going out and recruiting and finding people is extremely difficult. I think there's all sorts of strategies, and that probably people much more qualified in HR can talk about in relation to that. But in terms of planning cash flow, yeah, it's going to be the biggest step in your business to taking on the second employee. Okay, because what we need to know in terms of cash flow is that person isn't going to start generating income straight away. That person is not going to be fully utilized straight away, but we're going to still have to pay them for their time and their efforts. So how do we structure their contract? What are we doing in terms of paying them? If we put them on full time, 37.5 hours a week, but we only have 10 hours worth a week to give them, what do we do with that spare capacity? Do we have enough of a cash buffer in place that if we have a shortfall and can't fill the capacity, we're able to meet that. So I think, Tanya, like planning ahead of what that's going to cost us and what cash flow buffer we might need if that person is only 50% in capacity, or do we have options to pay a higher hourly rate and put someone on casual until we know we've got enough business to put them on a more full-time capacity? So planning around the utilization of hours of that staff member might be the right thing to do. But an interesting question is getting the staffing mix correct. And quite often the strategy of building our business might not be to instantly go out and get an additional professional staff member. As a sole trader and a business owner, there's probably a lot of stuff that we are doing that is of lower value than our professional services that we could potentially outsource or get some assistance from some part-time administration to help us build up our fees to 37.5 hours or more before we take on that extra person. So that's another consideration you might want to look at.
That's cool. Thank you.
Yeah. So Michelle's got some great tips there for, I think, be ready as soon as they start to be super clear on what they need to do and achieve and on what time frame. Bang for your buck ASAP. And that's true, like Michelle, like trying to get a return on that employment sooner rather than later is going to help you. But it's all about planning what your commitment's going to be and the ability to staff and resource that person. So just quickly scrolling back through, some really good comments coming through. I think if anyone wants to jump out and shoot some comments my way, feel free to unmute. What are the big challenges you're facing at the moment in cash flow? What do you think you can apply in the cash flow levels, or what advice do you want to get in terms of what that might be? Anyone brave to jump out? Is Lisa putting your hand up again? Feel free to just jump in.
Oh, yeah, thank you. I guess one of the things I just wanted to say was one of our cash flow challenges, which just continues as a result of COVID, is actually having to have excessive inventory, and our cash flow being, largely tied up in that due to all the uncertainty with shipping and supply. I'm not sure if anyone's got any wonderful tips on that, but that certainly impacted our capacity to grow, which has been on the back burner for this year.
Yeah, so you're carrying extra inventory to help you with the time delays and the shortages of actually getting stock on hand and the shipping problems. Is that right? Yeah,
that's exactly right. We did review all of our pricing, fortunately early in the new year, and tightened up our credit terms and capacity with most of our customers. So that was pretty, just luck rather than good planning with the timing and everything, because it's there's certainly the inventory side of things just continues to spill for us, unfortunately.
Yeah, and I guess there's two sides of that. You can increase the speed in which the cash comes in when you make the sale of that inventory, or there's the option to try and turn around and negotiate with your suppliers to get better terms in relation to paying that inventory, paying for that inventory in the cash going out, and reduce the timing of the cash going out of the business, just to give you that extra buffer, Lisa.
Yeah.
So there might be other options in relation to some bank finance around inventory lending that you might be able to help you out if there's a gap and you just need to fill that funding gap, if you literally can't afford to do either of those other options. But then it would come around to then looking at your pricing of your product and understanding that if I'm going to pay some money to a bank to help me finance the holding of that stock, are my prices absorbing that cost? And many suppliers we're seeing out there at the moment are increasing their prices and passing on them on to the consumer because of the inability to acquire or maintain or hold stock. And consumers are starting to understand that because they can't get materials or stock or inventory, and that there is going to be a price pressure on a lot of things. So yeah, a few levers that you could pull there. But yeah, how flexible are your suppliers? We've worked with importers who have some really amazing terms because they've got great relationships with their suppliers, and the suppliers are happy to help them to drive up their inventory stock levels, and support them as a customer of their business, whilst we run our business and try and maintain that cash flow.
Yeah, that's something I should revisit. Thank you.
And Jackie,
sorry,
Nicola?
It's Nicola again. I just wonder what your thoughts were on invoice factoring. Like, is it damaging to your business for people to know that you're doing that? Would they find out? Like, what's been your experience, if you can talk to that for a bit?
Yeah, so invoice factoring, for those that haven't experienced it, is where you are able to get money from a lender for the invoices that you've issued to your customers. So basically receiving cash straight away for invoices before your customers pay you. And Nicola, when you talk about it in terms of factoring, that's very much the history of factoring, and the word factoring is very negative connotations in relation to finance, and traditionally your customers knew you were using factoring because they would have to pay to a special factoring account. It was quite often not directly to the business. It was actually directly to the financier, which often wasn't one of the main banks. So in the past, there has been a lot of signals that someone is using factoring, and factoring being a very alternative finance was generally a sort of a source of last resort for funding in the past. We do still see it. People generally don't call it factoring. Debtor finance is quite commonly used, or and a lot of the lending institutions now are quite a lot more transparent with what's going on, so that your customers aren't necessarily seeing it. What I would say about using a finance facility on your invoices, whether it be factoring, debtor finance, or by any other name, it is not a sustainable type of finance for your business. The costs are generally pretty high. The ability to maintain that over a longer period of time is not ideal for businesses, but where it does really help businesses, and actually is a really positive thing that can help, is where you have a business with growth. Growth puts a lot of cash pressure on a business, because to grow we need cash, and we tie up more and more cash the bigger we grow, and our working capital needs are bigger and bigger and bigger. So quite often, as a short-term funding option where a business is seeing significant growth, factoring can be actually very useful. But as a business that's not going through massive growth, and if it's a funding source of last resort, it can be actually quite a difficult option to sustain, because it's very expensive.
Yeah, you can tell I graduated last century.
Yeah. But that's
We,
we go right back to the start, Nicola. There's all sorts of terminology that we throw around when we're talking accounting and finance, and but yeah, factoring is one of those terminologies that certainly is. I wouldn't say last century, but it's very much changed a lot over the years, and it's not necessarily what it used to be. But I think the underlying principles of factoring really is specific to the business, and it can be a crutch for a dying business, or it could be the rocket ship for the business that's growing. So it really depends on where you are with your business.
yeah, I mean, I guess I'm happy to tell you the specifics briefly. It was for a large, what do they call them? Google, Alphabet, Facebook. There's a term for it. Anyway, one of them, and their payment terms are 45 days, but they were a big company that always paid on time. It just was 45 days, which was horrendous. And we were looking at only factoring their data financing their invoices.
Yeah, and that's a great example of an where it's, you know, you're limiting to a certain type of invoice, it's specific circumstances, so it fits right well into your business. The question is, if it's the same invoice over the same period, and you're just literally factoring the same sort of amount, you're not growing or utilizing it, you really need to stop and look at the cost of that, and whether there are alternative funding for long-term funding options that you could utilize. If it's just for a significant growth period where you're doing a lot more work with that customer, and because you're doing more work, it is profitable, but it doesn't provide you cash. You need that cash now to then do more work and grow and grow and grow. A really good option. But if it's just a long-term, this is my best option to finance something, it's going to be very expensive just to do that over a long period, and you're probably better off looking at finding a better working capital solution to fund that.
Agreed. Thank you so much.
You're welcome. All right, I think I've got probably 5 minutes for a few more chats. Is anybody else want to be brave and put their hand up and unmute and have a chat about some cash flow issues that they're seeing and the levers that they might want to be applying? Jackie's made a comment in the comments about cash flow answer about funding grants, economic development grants. Really great point there. There's a lot of alternative funding solutions. So finding those, understanding what you're eligible for to get funding options out of the government based on what activities you're doing. The City Council here in Brisbane is very, very supportive of business in particular. And we've seen some really great initiatives come out of the Brisbane City Council. The state and federal governments are constantly having different types of funding options, where we saw through either the Q-Rider loan scheme in the past 2 years with the COVID pandemic response, or whether it is, you know, some unique activity that you're doing where you can actually apply for a funding grant for your activity. So whether you're in manufacturing, whether you're in export, whether you're in research and development, there's some really, really good options out there in relation to the grants. Now, can I hear someone out there trying to jump in with a solution or a question?
That may have been me. It's Belinda.
Belinda.
Sorry, I just follow up, obviously, on my comment in the chat there. It feels like we're competing a little bit in terms of levers, in the sense that we'd like to work on our sales volume lever. We've done a lot of work in the other spaces, but potentially for our clients, they're doing the reverse. So, you know, in trying to minimize their expenses and things like that, it means that our service may not be the priority. So particularly in community services, it's quite challenging in terms of COVID response, managing staffing issues. So for us, it's how do we demonstrate our value to increase our sales when they're doing the reverse. Yeah,
and that is a challenge, particularly where we might not be seen as that essential service or something that is part of that list of expenses that other businesses are trying to reduce in this cash flow management. I guess probably one of the levers you might look at is still within that volume is, are there other markets that you can offer your services to, or is there ways you can penetrate other areas of revenue streams that aren't part of your traditional offering? Can you repurpose some of the things you do into a different area, find new customers, and expand in that way?
Yeah. Okay. Yep. Good thoughts. Thank you.
But it also then comes back to potentially the utilisation of our own resources. If we're going to be forced to provide less because the demand is less, what are we doing internally to make sure we're controlling our overheads, maximising the productivity of the resources that we utilise, whether they be expenses or staff or materials that go into providing those services. If we're going to be providing lesser, than we make a better margin on them, or we reduce our overall overheads, we might have a better chance of maintaining a positive cash flow and controlling our cash flow.
Yeah, definitely.
So some good comments there. Jump on about the smart grants for the Brisbane City Council. Make sure you get those websites down. I think if there's any other questions about what the Brisbane City Council is doing to support small business, Brisbane Business Hub, absolutely the place to go. The team there, Chloe hosting us today, Miriam and Emily, and the whole team at the Brisbane Business Hub are there to support business in Brisbane. So reach out. Yeah, thanks, Chloe. Reach out to the Brisbane Business Hub for anything that you need in relation to business. So some really good resources going around in all facets of business. So, all right. So, any final comments before we roll on? No one brave enough to throw the last comments in? Look, there's some great comments going through the comments in the meeting chat, some really good resources everyone's sharing. I love seeing business owners get together and support each other with their ideas, sharing problems, sharing thoughts. This is really great to see. So thank you everyone who's contributing in the meeting chat. This is being recorded, so I believe we'll be able to share all those details at a later time. So, all right. There's no further comments coming out. We'll jump on and move along. So thank you for everyone who contributed. That was a really great discussion. Some really good thoughts about applying levers to specific business circumstances. And although every business is different, it's quite often really good to hear what other people are doing and share some ideas. So really appreciate everyone who contributed just in that last session. All right, so we've looked at cash flow levers and looking at how we manage the cash that is ours in our business and how we control what's coming in and what's coming out. One thing we need to consider and is critical and a common cash flow mistake is managing financial commitments. And that's understanding the cash that is not ours. So what cash is in your bank account right now? How much of that cash is yours? How much is somebody else's money that you're just hanging on to them for the moment? So quite often, we have to collect and distribute money on behalf of other parties. So whilst that cash in our account, it's not actually ours. So we looked at the GST example with Savvy Sally, sorry, and how she was collecting all this GST and she had to pay it to the ATO at a later date. We mentioned superannuation and PAYG withholding on our salaries and wages. We need to understand what our business activities are that trigger these commitments. And it's really good to put these due dates into our calendars. A lot of these types of commitments come on a regular cycle, and we can plan and predict and forecast when and how much these might be. A really good suggestion, a lot of businesses we see love this one, is to provision your commitments into another account. Do you have a GST bank account where you put your GST amounts in that you know you're going to have to pay to the ATO later, or the superannuation bank account where you put a bit aside on every pay run so you know you've got enough to pay the super when it's due every quarter. So there's some things we can be doing actively in the business to help us manage what those commitments might be in future. The ATO's got some really great resources in relation to tools and calculators and calendars. So we just, crypto computing, great name. Setting aside the tax and super in every pay run is a really, really good solution. And Michelle's got a great comment there about payroll tax. So Queensland payroll tax, and if you're trading in other states, making sure you're aware of payroll tax commitments in other states as well. Contractors payroll tax and payroll tax thresholds on wages are really, really important ones and can be quite hidden. So make sure if you're paying a lot of wages in your business that you're considering payroll tax as you grow. So things that are of this nature, generally we can find the due dates and put them in our calendars, and we can put them into our cash flow forecast in terms of amounts and timing. So a really, really good thing is to understand what our commitments are. But also, if we know we've got a problem, speak to our creditors before we get to the point of crisis. Calling the ATO and making a payment arrangement. Negotiating different terms with our suppliers when we know we might have to pay them late is a really important thing to do. Generally, if we take the front foot, are proactive in that regard, we'll get a much better result. So we've got this great resource. It should be in your activity pack on page 18. It sets out our calendar, our business calendar in a circle, a clock around the edge from 1st of July to 30 June, and maps out those really important timings of certain commitments with our ATO and other obligations we see as a business. So, is it those quarterly PAYG installments that happen in July and October, January and April, and those superannuation guarantee payments, which are critical, really important to make sure we've got enough cash to pay the super guarantee on time, because there's some pretty severe consequences if we don't. Are we lodging our payment summaries every year? Lodging our BASs in the quarter? Do we have an FBT amount that we need to be looking at every year? Lodging our income tax and doing that in May every year, or maybe in February, March or January if we're a larger business. And do we have to do annual things like our ASIC administration every year, or our trustee resolutions as a trust? It's really good to have a calendar set up so that we understand what our reporting but also our payment obligations are. So whether we have to pay that PAYG or that business activity statement or the superannuation guarantee, putting that in as a reminder and making sure we've committed to that cash and we have the cash ready when it's due. That's a really, really good resource there on page 18 of the activity pack. A lot of people like just to print that out, stick that up on the wall and make sure they're looking at that on a regular basis and understand what's coming up. Got a resource there as well that maps that out on page 19, okay, to help you look at those important dates. And a lot of these dates are available. If you've got any questions, reach out to your accountant, get some information about those activities that you specifically have in your business, those important lodgement dates specific to your business, and then start planning the cash that you need to put aside. So then when you look at your bank account and you see you got that money and you think, I can use that money to repay that director's loan or that shareholder's loan or that loan from the business owner, making sure that you know that you don't have to then turn around 2 days later and pay the same amount to the ATO again. So really this leads us into probably the most important part of managing our cash flow, is building a cash flow forecast. Now, I think when we took our quick poll earlier, there was quite a few hands thrown up about having an effective cash flow management policy or tracking cash flow forecasts in a business. This is a really important step, but something that's not commonly done on a regular basis or an effective way in most businesses that we talk to. So how do we structure a forecast for cash flow? So it's critical we're looking at this on a regular basis. So regularly, we recommend at least weekly. If you're well in control of your cash flow, you might want to do it on a less regular basis. But for most businesses, making sure that you've got your cash flow under control, having a look at this on a weekly basis, keeping it up to date, and maintaining a really clear cash flow forecast for the weeks and weeks in advance can really help our business. So we start with our bank balances. How much do we have in our business bank accounts today? And then we want to look at the cash that's flowing in, whether that be regular money that flows in. Do we have contracts with some customers where they pay us a regular monthly amount? or a weekly subscription or an annual subscription that we can see? Can we see things that are coming in on a regular basis? And also projecting when all those invoices we've issued are being paid. You know, we know when we issued them, we know our terms, we should be project when the customer's going to pay us. And if that customer says, oh, I need an extension, can I pay you late? Can you negotiate the timing of that so that it suits you? So knowing the cash flowing in, how much and when, based on our known activities. Then we need to look at our cash outflows. Again, this looks like our fixed and our variable expenses. So things that come out on a regular basis for the same amount. It might be the monthly rent, it might be the quarterly electricity bill or the quarterly rates. It might be that regular Google Ads subscription or SEO payments that we are making. Putting those regular cash outflows into our cash flow, and then looking at the things that come out on a periodic basis. So things that at an irregular basis. So those invoices that we might be issued by our suppliers that we have to pay a lump sum at a particular time. And then also looking at things like our commitments to the ATO, our payroll, our PAYG withholding that we have to pay, our superannuation guarantee, and payroll taxes was put out there. Very much looking at the things that are coming out of our business in terms of timing and also the amount. Once we're able to analyze our business and know with relative certainty what that looks like into the future, we can then complete our cash flow forecast and see what our bank account position will be in 1 or 2 or 3 or 4 or 5 weeks' time. Knowing what our cash position is going to be in the future can help us plan. Might give us that opportunity to see, as we can see in the little infographic here, that week 2, we're going to be short cash. We're going to be overdrawn. What can we do to make sure that we've got an extra $1,280 in our bank account to make sure we don't fall short in our cash flow commitments? Can we say no to a request for a customer paying early or paying late? Can we control cash going out of our business and defer a payment that we don't necessarily need? Having a complete forecast over a number of weeks or months can help us plan for the future and even give us the opportunity to turn around to the bank and apply for a loan to help us with that shortfall. Get some debtor finance or inventory finance, which we've talked about today, or just a traditional bank overdraft to help us get through a lean time where we might have a cash flow shortfall. So going through this structure of a cash flow forecast, having a really good process in place, a really good template, and then reviewing it on a regular basis and updating and refining as we go, it is really critical to managing and controlling our cash flow into the future. This is something we cover in a lot more detail in some of our one-day workshops in our business growth program. Elisa, I think I just, so I mentioned we do some pretty comprehensive cash flow forecast modeling in our one-day workshops. There are many templates that are available out there that you can use, or you can create something relatively straightforward in Excel depending on how complex you need. But the key is to have something in place, to update it regularly, review it regularly, and make sure that it is part of your workshop. Yeah, great. Thanks, Lisa. Appreciate that feedback. We'll talk about some workshops later on, but so a really good opportunity there. Make sure you're doing something in relation to cash flow forecasting. It's critical in times of uncertainty to give us a bit of an opportunity to plan where our cash flow might be in the future and look for risks and opportunities in relation to managing our cash flow. So where to from here? So out of today, we've given you lots of information and lots of resources about controlling your cash flow. So read through all of your cash flow lever cards, look through all those pages, find the ones that work for your particular business. Not everything's going to work for every single business. So have a look and understand which ones work for you. And then take the steps to implement some of those levers into your business. We've heard some really great examples today in the discussion about improving our our accounts receivable process, or talking to our suppliers about negotiating supply contracts, or trying to find opportunities to pull that volume lever, or try and find different markets that we can apply our services into. So have a look at those cash flow lever cards, have a look at all the terminology, understand what you can use in your business, understand how the cash flows through your business. But most importantly, that last point we've just been talking about, set aside some time every Monday to review your cash flow position. Where are you right now with your bank account? What are your commitments of cash coming in, cash going out? And have you got a clear understanding of your future commitments for cash that are not yours? Build out a really good cash flow forecast model, and make sure you set aside some time every Monday to update, refine, work on that, and get a real clear indication of where you are going with your cash flow forecasting. So we've got some information on the last few pages of the workbook, which really gives you some ideas where you can put down some information about where you want to go with these action items. So where else can you go for some information? Well, BDO, we offer a lot of free financial education masterclasses, just like this one, our 2-hour masterclass series. We run quite regularly through the Brisbane Business Hub and through our own channels on a national basis from time to time. We're currently looking at Control Your Cash Flow, but we also offer a Know Your Numbers session and a Forecast Your Financials session in relation to 2-hour sessions. So there's a lot more information on our website, but we're also getting into the Brisbane Business Hub in a fortnight on the 16th of February. I will be in the hub on the evening of the 16th to present the Know Your Numbers masterclass. So that's a great masterclass to help business owners with financial literacy skills understand the key numbers that go through the business. So, we say that. There you go. Thank you, Chloe, for sharing that link. It's already up there on the Brisbane Business Hub website. It's really key for business owners to know their numbers so they can make strategic decisions to grow their business. So really looking forward to getting back into the hub face to face, to see everyone's faces and have a really good chat and discuss a lot of the business challenges and opportunities that are out there. So if you've enjoyed today's masterclass, Control Your Cash Flow, come and see us for Know Your Numbers in the hub. Good question, Jessica. I don't think we're going to be offering anything virtually in relation to that session. So, and Belinda, normally we would run these sessions at any point in time. It's really good to work through all the sessions, Know Your Numbers, Control Your Cash Flow, and Forecast Your Financial Statements. But yeah, if you want to turn up to any of those at any point in time, keep an eye out in the Brisbane Business Hub. Then we also run one-day workshops within our BDO Financial Education. We're proposing to run our Build a Financial Roadmap workshop with the Brisbane Business Hub next month. So it's a one-day workshop where we look at building a financial strategy for your business and set out revenue targets and expense budgets to make sure we're meeting our strategic growth plans. So looking at different financial reports, reviewing our historical information and projecting a lot of our cost of goods sold and operating expenses. And from there, we build a revenue model for the next 12 months and finalize a financial strategy for the 12 months ahead for our business. And the key to that is to build a really robust, strong budget and then embed that process into our accounting files. So we're looking to host that in March with the Brisbane Business Hub. So if you want to jump on and register some interest, we really love to hear that. You can also register some interest about any of the other workshops we run at BDO, and we would love to then come and deliver those at the Brisbane Business Hub soon. And then the ultimate step for your financial education, BDO, we run our 12-month business growth program. It's a program that provides business owners, business leaders with a strategic framework for personal and business growth. Founded in financial literacy, we look at financial management, so covering all these 3 key topics. We look at sales and marketing processes in your business, human resources, and business operations. It's a 12-month program that we run in person over a 12-month period, covering one of 12 modules every month. So we cover everything from big picture planning, financial strategy, profit and cash flow, all the way through sales, digital marketing, social media marketing, building a team, operational efficiencies, and recapping, resetting our targets for the year ahead. We're currently launching our new intake of the business growth program in March this year, and we're hosting some information sessions over the coming weeks. So if you want to find out more information about our business growth program, don't hesitate to jump on the BDO website, Financial Education Business Growth Program. I'd love to talk to you about some of the opportunities that we have there in relation to the programs we run. So thank you very much, everyone, for attending. I hope you got a lot of valuable information out of today's masterclass on controlling your cash flow. If you enjoyed the session, please give us some great feedback. And if you want to learn more, come along to the next session at the Brisbane Business Hub on the 16th of February and register your interest in any of the one-day workshops that we are running and would love to run with the Brisbane Business Hub in the future. Big thank you to Chloe and the team at the Brisbane Business Hub for hosting us. We love working with the Brisbane Business Hub and supporting business in Brisbane, and I hope to see you at the hub sometime soon. If you've got any questions at all, feel free to reach out. My details are in the information pack, and if you have any other questions about what Brisbane City Council is doing to support Brisbane, don't hesitate to reach out to Chloe and the team at the Brisbane Business Hub. So thank you, everybody, for attending. I really enjoyed presenting to you today, and I hope to see you soon.